Going on, everybody? Hope you all having a blessed weekend. This is your boy, True to the Strat. We're gonna kick it off straight with the weekly watch list video. Now, to start off, we have a crazy week coming up. We have some very interesting earnings setting up. For example, we got Visa, Microsoft, Meta. These two have good setups going into next week, but we're gonna see what happens with those after earnings. We have Robinhood, QCOM, Apple, Amazon, Eli Lilly, Roblox, CVS, MasterCard, McDonald's, just crazy earnings, XR, CVX, right? So I expect some volatile week coming up. And we do have some red news to address as well. Tuesday, we have JOLTS. Wednesday, we have ADP non-farm employment change, advanced GDP. May, we have unemployment claims. Friday, we have average hourly earnings month over month and non-farm employment change as well, and unemployment rate at 8:30 a.m. So I'm expecting a lot of things to shake up next week. And of course, if Trump have anything he want to add as far as tariffs, that's can also shake the market as well. I'm going to keep the weekly watch list pretty short because of these factors that's going to happen in the market. And I'm going to start off with J&J. I like the way J&J is setting up. Let's take it from the top. So to start it off, J&J just been consolidating for several quarters. As you can see, for one, two, three, four, it was 5 quarters straight. We do have a 3-1 on the QR, still red, but we are hammering inside. On the month, we have a hammer as well. Hoping this will pick up to turn this, eventually flip green, but we are heading into a new month. We heading into the month of May. So we could expect the 2-2 rev pretty soon. We did break some highs over here, the previous highs there. So we're looking for that TTO back to the upside. As far as the week, we are still inside on the week as well. I like the way this one is developing. We will open up double inside week. If we do stay double inside week or double inside week up, meaning that if this current week coming up turns green, this is going to have a lot of people's attention. Dropping down to the daily, I love that we have an actual signal on the daily. We have a hammer, and I like the way these wicks are showing up. Aside from that, we are also in a monthly OTE. I anchored the OTE from the bottom here to the top, and we've been wicking out of that OTE, and we sitting right on top of the 50% as well on the monthly OTE. So if I drag back down to the daily, you can see that 50% OTE on $153.34. So I like the way this is holding. As long as price holds 151.17, I'm liking this trade. I like the way we sitting on top of this consolidation. I'm loving the wicks on the daily. Every time we drop, we kept wicking. So we could expect a 2-2 rev pretty soon. Even if we open up inside and keep consolidating along 154 and 151, I'm okay with that. But I like the way this is setting up. Dropping down to the 6 hour, we have another actual signal. We have a 2-1 inside 1-2-1-2 break to the upside. And on the 4 hour, we have a two down and inside 2-1-2 reversal break to the upside as well. So I like the way this setup is looking. Mini gap to fill here between 165 and 161. Again, I asked the group, do y'all want me to put contracts, selection, targets? So I'm gonna add contracts and targets into this. All you have to do is set your alert. We like calls above 154.95. And if I hit the analyze tab, I like contracts May 16, 160 calls for 98 cents. And I like 20 June 170 calls for 48 cents. Right now, I have this checked off at 20 June 170 calls for 48 cents. And these are the targets as well. So you can always reference back to your charts and see where these targets lay on the chart as well. So just to give y'all a little example, let's go into the daily. So first target I like is 159.44. So we have 159.44. If we hit that by May 2nd, that's 105% return for June's. To me, that's pretty dope, right? June's is 2 months out, and that's not a lot of movement, right? That could happen in realistically, that could happen in one day if we get a nice move to the upside. We get 159.44, right? Then another target we have is 164.23, and that's at the gap fill. So with the 164.23, that's a 350% return if he was to hit that by May 2nd. Do I think we're gonna hit that by May 2nd? No, but anything is possible. So I like to see worst case scenario. Let's bump that to May 15. If he was to hit 164.23 by May 15, that would be over a 200% return on investment. Remember, the contracts is only $48 with so much time on it, meaning the risk to reward is very, very low. This is very, very low risk. So let me know what y'all thinking about that. If you look at the maze at 515, if we was to hit that 164, you have a 300% return on investment as well. If you was to hit 160.59, that's 27%. So 160.59 is right around this range here. Also, I want to point out some discrepancies or any conflicts that we may have with the trade. I believe we could see some turbulence at 160.56 only because it's equal highs and right before that gap fill. If you do get above that, I mean, the better the trade, but I expect, some kind of pullback at that range when we get there. However, again, loving this setup, loving the way this looks. Still inside, so be a little patient with this, but I cannot ignore the risk to reward with this. Again, you guys, these are the targets. Reference these targets, and these are the contracts to select or the contracts I like. Now, you can always look at your own contracts, but these are the ones we are looking at. Next setup I like is XOM. So taking XOM from the top, again, another ranger. This has been ranging for almost 3 years straight, to be honest. This is the quarterly chart. And I'm just going off previous price action, right? Price has memory. If we keep bouncing from 103.67 and keep going to the upside and keep going back down and then keep going back to the upside, then I'm going to follow that trend as well. Come down to the month. We are still red and two down as well, but we wick to the upside. Now, the week is where things get a little interesting. I do like we went two up on the week. We went two rev 2 weeks ago, then went two up this week. We do have earnings on the 28th. The risk we taken is we can wait after earnings or swing through earnings, whatever you decide. I might swing through earnings just to take the risk, but I like the way this is setting up. If we can stay above 108.57, I think this has a lot of potential to the upside, possibly all the way back up to 115.45, right? At least to 112.23. And I say that based on previous price action. You can see how price on these weekly candles, we wick back to the downside each time. So 112.23 has to be a target. 110.83 is a target as well. Let's drop down to the daily. We have a double inside and we have a bullish pennant, and we are sitting in this gray area, which is a demand zone. So look to the left, you see how this demand zone works. And if I zoom out some more, you see every time we kind of launch from 108 or within this demand zone, within this range, this box, always launch from 108. So I'm looking for price to do the same thing here, eventually launch from 108. We could experience some more consolidation and anticipation to earnings. So just be a little patient with that just in case. But we have a couple of gaps to the upside. I like how XLE is setting up in addition to that. Shout out to Goose. I think he's looking at Oxygen CVX, one of those, but those look good as well. They do have earnings at the end of this week. So let's just play about earnings. Again, if you just want to swing through earnings, that's the risk you take. I'm looking at calls above 108.86. First target being 110.83. Second target being 112.23. Third target can be 114.37 and or 115.45. And finally, the last target should be around 117.66. Now to look at the contracts, I like 20 June 120C at 80 cents. Just looking at, again, these targets, if he was to hit the spot 515, that's only a 17% return. If he was to hit 115.45, that's over 121% return. To me, that's good odds. Going back to the charts, 115 is right here. that could happen in 2 days, realistically. If you could get good upside or good earnings report, that could happen in like 2 or 3 days, right? I'm just looking at worst case scenario by seeing what can happen at least 2 to 3 weeks from now because you always want to be prepared for worst case scenario. You always want to be prepared in case the market doesn't go in your favor. Anything could happen, anything could come out that could circumvent what you originally planned. So just be prepared for that by buying time, right? If we come down a little bit, let's say we hit that by the ninth, that's over 153% return. 112.23 would be a 41% return. And remember, these are monthlies. So 112 is only right here. You know what I'm saying? Good odds, in my opinion. And plus, we should expect some turbulence around 112, 112.23. Just looking at these highs here again. So just keep that in mind. To me, that's a nice base hit for a monthly contract. And yeah, 119.22 will be over 300% return. Remember, again, that's June. So if you go and click the May 16th for 17 cents, I was just looking at for the 17-cent one, like a little bit into a lot kind of vibes. Now, if you was to take the 120s for May 16th, that's over 136% for the 115 target, negative for the 112 target, and if you was to hit 119, that's over 700% return. To me, this is a great one to swing through earnings. Looking at 1/10th calls for $232, over 140% by May 9th, 30%, nice base hit, 112. And if you hit 119.22, that's about a 300, over 280% return. So again, these are all based on your risks. If you want to put up more, obviously, because the delta is higher and the strike is closer, you're going to make more on those. If you want to, you know, low risk it, 17 cent, and you want a medium risk, you have the June 20s, which is a lot of time. These are also awesome to trade into the XOM. So like that. Next ticker I like is Dow, DADO. DOW. So these, there's no continuity. There's no continuity as of yet, but we have to, with trades, right? Continuity only increases the probability. At some point, for every ticker that went into continuity, had conflict at first, right? Repeat that. For every trade that had continuity, it had conflict at first, meaning that you see how he read, eventually when his stock began to head back up, the higher time frames would begin to flip green, turning this ticker into full time frame continuity. Same way when Dow was 71.86 up here, it was full time frame continuity to the upside until it started to dump and flip the higher time frames to red, pointing it to FTFC to the downside. So that's why I'm okay with taking trades without continuity just yet. What I rely on from there is price and where did they buy from. So I noticed that 26.93 is an area where they buy from. We haven't been down here since 2020. See my drift? So I like the way this is looked. This might be a value purchase here. This could be a long-term play as well. Come down to the month, still around the month. We could spread the month out just a little bit more. Let's go 10 years. You can see how we are again coming and bouncing from this 26 to 25 range. Then you have the weekly. Now, the weekly is what I was interested in. I like that we went 2-1-2 in force. Now I'm looking for that 2-up continuation. And we do have actual signals on a daily that could put us in a 2-up continuation. We have a inside daily for the 2-1-2 up continuation on the daily as well to trigger that week. We do have a gap, so our first target will be 31.38. Second target would be 50% of this bar or 33.64. And then finally 34.48 just to keep it as a short-term swing. Relatively looking at this chart, these targets are not that far. And also I like how these contracts pay based on the analyze tab. So contracts I'm looking at is May 16, 32.5 calls for 32 cents. And if you look at, let's say 31.38, You got 31.38. This is about May 9th. So these contracts would not print if it hit 31.38 by May 9th. But let's say we was to hit that by May 2nd. That's a 69.97 return on investment. So that could be some quick gains right there on your monthly contracts. Could we hit that by May 2nd? Yeah, it's right there. It's right there. That's 1 day worth of move. 1 day worth of move. If you a person that's just want to collect your base hit, there it is. Right. Just to give y'all a perspective on how to look at this. How to look at this. Going back now, looking at the other 33.64, that's over 300%. But 33.02 comes first. So going back to the chart, 33, I think 33.02 is the 50% of this bar. No, not even. So, but I know 30, we hit 33.02 before we hit 33.64. 33.64 will be the final target. And I just like how these contracts pay. So 33.64 is right here. That's over 300% return on investment. If we was to hit 33.02, that'd be 224.57. Like I said before, you can add 50% of this bar here. That's 32.51. So let's add one more layer. 32.51. That's over 100% return. Let's say we hit this by May 15th. See, 31, 38, you'd be underwater, but at least you'd be positive by 32.51. And when you get around 33s, you'll be well over 100% on those. So decent odds on that. The Junes, the Junes 32.51 will be 93% return, which is very, very good for these contracts. I like that. 33.02 will be over 131. 33.64 will be over 181% return on investment. These are good contracts, very good contracts. Let's say you wanted to go with the July's 32.5 calls. Now, look how this plays out. More time equals more delta. 31.38 will be positive by May 15th. Do you guys think that it will take a month, 2 months to hit 31.38? No, right? So, or do you think we can hit that by 5:15? Yes. So, another way to grab a base hit if you want that. Another very good odds on those contracts. It's probably the best contract, honestly. Looking at 33.64 over 120% investment, return on investment. Very good cons, very good cons. 35 June 35 calls strike. We have barely at break even for 31.38. 32.51 will be 84%. 33.02 be over 100 and 33.64 would be over 200%. So again, I like Dow. These contracts are very, very good. Low risk, high reward trade coming off the lows, coming out of consolidation, coming out of demand zone, and that's why we like it. On top of that, we have a 2-1. So we get that. And this is a bullish pennant as well. With the higher lows and lower highs. So looking for that explosion to get out of there eventually. Right. Um, yeah, that looks great. TJX. I don't play TJX that much, but I like the way this is consolidating. Starting from the top, the QR, this is full time frame constantly to the upside. The month is also green as well, triggering 2-2 rev and force on the month. Above, what's this? Triggered above 125.99. And then we have the weekly time frame. We have a red week 2 down hammer. So come next week, we get the 2-2 rev, right? So this was green for 1, 2, 3, 4, 5 months. I mean, 5 weeks. It went up. Finally caught its pullback. So this is perfect for the TTO back to the upside. Catching that 2-2 rev on a daily. Come down to the daily. We had a lot of consolidation last week. and we are sitting in the bullish pennant as well. So I like calls above 127.06. First target being the previous week high at 128 at 128.04. Second target could be 129.27. Third target 130.51. And finally, last target 131.30. Let's analyze some contracts. I like the May 130s. Again, we got 130.51. That's by 515. That would be in a negative. If we hit 131.56 by 515, that would be a 39% return. If we was to hit 139.22, that would be over 100, over 600%. We want to hit that 131.30 or that 131.56. So I expect that to happen before 515. So let's say about 5.9. By 5.9, we hit 130.51. Go back to the charts. 130.51 is only right there. That could happen in a day or two, honestly. But we're gonna give ourselves at least a week and a half out to hit that target, and then finally hit all-time highs at 131.30. So this is straight bullish. Look at this for all these years. It's been running to the upside. And now we have the opportunity to catch that run back to the upside. From there, it will be blue sky breakout. I think we should aim for 132 after that, then 134, then eventually 135. So let's say we do get above 131. Let's see what happens at 132. So 132 would be over 118%. And if we hit that by the 15, it'd be 66. So nothing too crazy as far as the return, but I like the odds of hitting that upside. If you guys want, you can explore more cons here or look at the May 9ths. I don't like the open interest on some of these, but I do like the 130s here. So that's why we chose the 130s. Right. I'm gonna add a bonus, which is hymns. Hymns have earnings coming up, but I like the way this one is looking. Starting with the month. The month is still in the doji. It did held 2407 and it started to consolidate in its range ever since then. It doesn't have full time frame constants to the upside. We did consolidate on the week for 1, 2, 3, 4 weeks straight. We had the double inside and then we went fail two down. So this letting me know that they don't want to take it to the downside just yet. So we had a 2, 1, 1, 2. A lot of strategists probably was looking at that, triggered the downside, but then ran right back up. So that lets me know that the buyers are here. They are present in this trade. If you look, price has memory. We also launch from this range as well, kicking it all the way up to 72.98. Not saying that could happen again, but we could expect it to launch from this price. Again, we do have earnings on 5.5, so it could be waiting on that. Could be waiting on that. Look at the daily. We have a double inside. Right. First target, 29.84. Second target, 31.22. And because this is such a, wide space, you can always take the 50% of this bar here. Oh, it's at the same target, 31 point. So yeah, so then third target will have to be 33.70. Go to Analyze tab. I don't have 33.70 added here. So I'm going to add 33.7. In my opinion, this one is like a medium risk kind of trade. By 515, these contracts would not have any value for any of these targets. So this is probably a higher risk trade. We want to expect this to break out soon. Probably won't break out this soon. So I give this a setup like a C plus. It would have to make a move by this Friday for it to even see 40%. So that's a bonus one to look at. I just like the consolidation at the bottom. I do believe eventually this will pop aggressively. That's why it does have my attention. But just keep that in mind. Contracts don't look too appetizing, but I believe the pop is there. So that's it for the weekly watch list. Again, I do like Tesla. I do like Meta. I do like Microsoft. Um, we could breach 120, 290.26 for Tesla. But at this point, I would love to see a slight pullback at these equal highs before looking for an entry back in. And we could also play TSLL on that regard as well. So we're going to keep that on watch as the week develop. Microsoft looked great as well, but again, it has earnings on 430, so these contracts are going to be super, super duper inflated. And I don't know if anybody want to swing this one through earnings, but we're going to keep our eye on the way this one develops. And last but not least, Meta. We're going to keep our eyes on Meta as well. Another one that have earnings this week. Coming up the lows, coming out of demand zone here. Looks dope, but they have earnings on the 28th, on the 30th. Yeah, so gonna see how those develop and see if we could grab us an entry to catch us to the upside because Meta is at a discount right now, overall speaking. All right. So have a good day, you guys. Have to enjoy the rest of your weekend, and we are locking on Monday. All right. Peace.